Gold prices plummet 1%. Fed's rate decision U.S. market impact explained. Gold's value took a notable hit, plunging over 1% following the Federal Reserve's decision to maintain interest rates without change, despite widespread anticipation of potential cuts. This move, combined with surprisingly strong economic data from the U.S., has dampened the allure of gold, a traditional safe haven that doesn't yield interest. But here's where it gets controversial. While many expected the Fed to signal easing soon, the cautious stance and split votes among policymakers raise questions about the central bank's confidence in the economy's stability. As of mid-afternoon, U.S. time, spot gold had dropped 1.5%, settling at approximately $3,275.92 per ounce. Meanwhile, U.S. gold futures also reflected the bearish turn, closing 0.8% lower at $3,352.80. This decline is significant for investors who often rely on gold to hedge against uncertainty. Inflation, or currency fluctuations. The Federal Open Market Committee, FOMC, decided on a 9-2 split vote to leave interest rates steady within the range of 4.25% to 4.50%. The dissenting votes highlight internal disagreement over the timing of rate changes moving forward. Federal Reserve Chair Jerome Powell emphasized that no decisions had been made regarding potential rate cuts in September, despite market speculation anticipating the year's first reduction. He further underscored the downside risks to the labor market, indicating caution but no clear path forward. Tai Wong, an independent metals trader, weighed in, noting Powell's firm stance prioritizes inflation control over employment concerns. Wong also pointed out that the U.S. dollar's recent strength adds downward pressure on gold prices. Yet bullion is still holding its ground near support levels, suggesting that any further dips might attract buyers who remain confident in gold's underlying fundamentals, including global economic uncertainty, the burden of U.S. debt, and geopolitical trends like currency de-dollarization. Supporting the mixed economic signals, the ADP National Employment Report revealed that private payrolls in the U.S. grew more than anticipated in July. Although subtle signs of a weakening labor market linger, this nuanced data complicates predictions about future Federal Reserve moves and consequently affects gold's performance. Nitesh Shah, commodities strategist at WisdomTree, offered another intriguing perspective. The louder political voices, specifically from the Trump administration, criticizing current monetary policies, the more it could paradoxically fuel gold demand. This suggests that political climates and rhetoric could have unpredictable impacts on metal markets beyond straightforward economic indicators. It's important to remember that gold typically thrives in low interest rate environments and during periods marked by uncertainty and instability. With the Fed holding steady on rates for now, gold's trajectory remains uncertain. The precious metals complex experienced broader declines alongside gold. Spot silver fell sharply by 3.2%, hitting a near three-week low of $36.97 per ounce. Platinum took an even steeper dive of 6.6%, closing at $1,303.19, its lowest since late June. Palladium wasn't spared either, dropping 4.9% to $1,196.75. These steep declines, according to Jim Wyckoff, a senior analyst at Kitco Metals, may be driven by short-term futures traders taking profits after recent gains. Wyckoff elaborated that the downturn in gold prices likely exerted downward pressure on platinum and palladium as well, given investors often view these metals as linked to similar market forces. This synchronized movement might indicate broader sentiment shifts in the commodities sector. In light of these developments, one must ask, is the Federal Reserve's cautious stance a prudent hedge against unknown economic risks? Or does it risk stifling growth and market confidence? And what role do political forces play in shaping these critical economic policies? Are these factors fully reflected in gold and precious metal pricing, or are investors underestimating the complexity? Share your thoughts and join the conversation below. Do you agree with the Fed's cautious approach, or do you see gold's recent drop as a sign to buy the dip?